Hi, I think the big focus of the markets will continue to be on potential inflationary pressures. The last CPI and PPI print that we saw was actually fairly friendly, but I think we have continuing building pressures, whether it's supply chain issues that have yet to materialize, or obviously we've had an escalation of tensions between Israel and Iran, and we've seen oil prices spike up substantially. So upward prices on commodities at a time where supply chain issues may be materializing is a concern, and a concern again about what is the ability of the Federal Reserve to cut interest rates as the economy slows. So on Friday, not only did we see oil prices rise up, we also saw consumer discretionary stocks fall, and in particular in the area of travel. So I think the war that we've seen will continue to basically cause people to doubt their plans, and will likely cause more pressure on consumer sentiment moving forward. We've obviously seen a really nice rebound in the equity markets. And in fact, even if you look in the bond market, spreads are almost back to where they were before the tariffs were announced. So it's interesting to see where valuations are today. And I think the big question is, how do we think about things moving forward? One area that I do think is increasingly interesting is emerging markets, which have performed quite well this year. Emerging markets historically do well when the dollar is weak, and we seem to have a policy that is consistent with a weaker dollar. Also, if you look at all the emerging market countries that comprise the MSCI Emerging Market Index, all of them, with the exception of Brazil, are in the process of cutting interest rates, which might be a different situation than in the US. And if you look at China, which is the biggest weight in that index, they're aggressively cutting interest rates. So I think emerging markets have done well this year and continue to be an area that's very interesting. Thank you very much.